What up, Hyperchange? Welcome to another episode. Today we're talking about Arcimoto. I'm doing a follow-up on the company's bull case and why I think there is some hugely exciting potential here under the hood. So I put out an Arcimoto video yesterday explaining how the company was, running out of cash, but about to start customer deliveries. There was a couple flaws in my analysis. Actually, the CEO commented on the video and left a ton of great insight and information. Actually, then followed up with him, just got off the phone with him, Mark Frohnmayer. Awesome guy about, 10 minutes ago. Then I actually just bought a little bit of Arcimoto stock. So now I'm a shareholder, just a super tiny amount because I want to be involved in this story. I want to follow it. After researching it more and more, I sort of believe in the story more than ever. So first I want to correct what I talked about yesterday, and then we'll go into, my bull case, bear case, base case scenario for Arcimoto and how I see the future unfolding. So Arcimoto, in their Q3 press release, said that they were almost running out of cash and they would be out of money by the end of November if they didn't raise funds. I originally thought they would only raise $4.5 million by selling 500,000 shares of stock and then issuing a $3 million piece of debt, along with another million shares in a convertible note attached to that. But the reality of the situation is they actually raised 2 rounds of $1.5 million. So in total, Arcimoto raised $6 million, not the $4.5 million I thought. So their cash cushion is going to be bigger than expected. And originally, the cash that I only thought was going to last them, a few more months, maybe until April or May of 2019, is probably now enough cash to last them, through the summer of 2019 or around then. So I did want to clear that up. And what I thought was super, super interesting in what I learned from Mark Frohnmayer, the CEO, is that he actually, and many of the insiders of Arcimoto, participated by a huge amount in this actual equity round. So the CEO and founders of the company were buying stock. He said that he bought about $420,000 worth of the offering. So out of the $3 million in stock they raised, more than 10% of that was put up solely by the founder and CEO of the company. Additionally, another $400,000 or $450,000 of capital were put up by other insiders. So a huge chunk of the money they raised was from people in the company. And what I missed in my last video, if you take a look at Arcimoto's stock chart, so this is Arcimoto's stock chart since they IPO'd in late 2017. The stock price took a huge hit when they announced that Q3 report that said, they needed to raise money and, deliveries were going to start soon. The market was spooked. So the stock dropped a little bit. And then at the end of 2019, or just about as the new year hit, after they announced their new funding, the stock soared from $2 back to $3 after they announced that raising the $6 million. And so what I think is super interesting about this is look at where the stock was while they were raising at $3. So insiders and bigger, institutional investors were putting money into Arcimoto at $3 per share, while in the free market it was trading at $2. This is like a 50% premium to the market price. This is a really, really good sign. So not only were insiders putting up money, but they were doing it at a premium to the market price. So if you buy Arcimoto shares today at $3, you're paying the same exact price the CEO and founder just paid to invest in the company. So that's a really good sign. The company's management and CEO is putting their money where their mouth is. And so the picture I painted in the last episode, I think, was a little too bleak and negative and presented the bear case of like, oh my God, they're running out of money. I showed these charts of how their losses were accelerating on an annual basis and even on a quarterly basis, how they're, losing about $3 million a quarter. Even if they raise $6 million, like they're still going to need to keep raising money, et cetera, et cetera. Like I never painted, the picture of like, but what if it actually works? What if Arcimoto succeeds? What if they, do ramp production through these next 6 months, prove it works, and then they raise more money, and then they can get to profitability, and then all of a sudden, this tiny little company actually succeeded? I mean, I think there is a chance, and it's worth telling the story, and so that's what I'm going to try and do now. But before we get into the business and financials too much, I want to talk about the CEO and founder of the company, Mark Frohnmayer. So Mark Frohnmayer, who I just spoke to, is an awesome guy, and he has a pretty unique and interesting background, which I think is important to understand. He originally was a software developer, and he started a company in 2001 called Garage Games. It's a video game development company. He sold Garage Games in 2007. The total deal value was around $50 million, made a bunch of money from that, and then, was always passionate about climate change and was trying to buy a vehicle that could get him around town. He loved biking. He didn't feel the need like buying this massive multi-thousand pound, huge steel box that was polluting just to get him from point A to B, just seemed impractical. And so in his own quest to sort of find design, some sort of sustainable thing that could get him from point A to B around the city, he noticed there was a huge gap in the marketplace of something in between a sort of car and a motorcycle that could get you somewhere not burning fossil fuels. And that is how, and then he was at this fair in Eugene, Oregon, I believe, and saw some sort of little buggy device, and then had this aha moment of designing this three-wheeler, which is now what you see today, what Arcimoto has developed, is the 8th generation of this technology that they've been developing for 11 years. So after selling his company, this software developer goes all in on starting this electric vehicle startup. He put up he put up the first couple million himself to fund this company to get it off the ground. Mark Frohnmayer still owns 40% or so, that's what he said, just an estimate of the stock in this company. So he owns a huge chunk of stock. He's been working on it for 11 years. He's got a software background. It's a mission-driven company. He's doing it for the right place. Like, these are all really, really good signs. This checks the box of one of my biggest investment criteria, which is the company have the owner, operator, founder trifecta? Is the person who owns a lot of the company, founded the company, and is operating the company the same person and doing all three at right now? And the answer is yes. I think Mark Frohnmayer is just an awesome guy. He's young, he's got energy, he's got the vision, he's got the hustle, and he's poured his passion into it. And those are the sort of CEOs I invest in. And, I personally bought a tiny bit of stock basically solely because I'm a fan of him. And I just think that he's a smart guy that I want to bet on. And although you see Arcimoto as this sort of weird, quirky little three-wheeled vehicle, you're like, oh, I've never seen those on the road. Who's actually going to buy that thing? Mark Frohnmayer views this huge opportunity that we have in front of us to reinvent the transportation system. When I was on the phone with him, he was giving me all these crazy stats, like, 40% of our urban landscape is filled with asphalt. And, despite, dedicating so much of our resources to asphalt and transportation, we're still super congested. It's still a pain in the ass to get around cities. We're still polluting. The transportation system is ripe for disruption. We know that. Another interesting stat he threw my way is 85% of ride-sharing rides are only single passengers. And so, if you think about optimizing the best vehicle for those single passenger rides, especially in an era of autonomy, then you're looking at a vehicle with a much smaller footprint than the traditional automobile, and that could be something like the Arcimoto. So Arcimoto is building in their designs this vision that eventually there'll be bolt-on autonomy solutions built into the Arcimoto. And forget the autonomous thing, but even just think today about like how many people are delivering food, how many people are delivering Amazon packages, all these short little urban trips where it's so much more convenient to have a smaller vehicle. Arcimoto could be a great fit and use case for that. This is a platform technology. They want to build, covered versions of the Arcimoto. They could eventually build a shell that makes it look a little more like a car. Like, there's just a lot of different ways this platform can go. That's kind of at a high level how I look at Arcimoto. Is they are a player in this huge disruption that we're seeing in the transport industry to get new forms of transport that are more sustainable and more efficient than we have today. So huge opportunity there. And I mean, it's only a tiny little $50 million company. And now they've purchased this huge facility in Eugene, Oregon. They've spent, a year or two building it. According to the CEO, it's almost, fully complete, or a lot of the hard work is done to actually build out the factory. They have the 8th generation of the technology. They have over 3,200 customer deposits already. That's a backlog worth of $49 million worth of orders that are already on the books, and they've done, no traditional marketing. This is a company that hasn't even sold any in the wild. So I think there's something here. I also took a look at their social media. They have, 16,000 Facebook fans, 4,000 Twitter fans, 2,000 on Instagram, a couple of thousand on YouTube, for a total social following of almost 20,000 people. And so I think, as they start delivering customer vehicles, as they start, expanding their business model, they're going to continue to get more and more press. Maybe the demand could grow. They also have a very unique retail strategy, which I think who knows if it'll work or not, but it's basically setting up these retail stores that double as showrooms for their products, but also rental stations for the fun utility vehicles. So, if you're visiting a city and they're going to set up their flagship one in San Diego, opening at the end of Q1, and you want to drive around the beach all day, you want to rent something to do it, to have fun on vacation, you can go to the Arcimoto store and rent one, and at the same time, you're actually test driving it to see if you'd eventually want to buy one. So they're actually basically creating a revenue generating model for test driving and advertising. So I think that's a really interesting, unique twist that they have that could be super successful. And so we'll see how that plans out as well. And so now I've taken the liberty of modeling out, 3 scenarios: base case, bull case, and bear case of the financials to see, where we get, what does the valuation make sense. And so now let's take a look at the base case for Arcimoto. Semi-conservative. And so this is actually, before I dive too deep into my unit sales, I do want to note that this is way more conservative than the company's planned guidance, even though it's my base case. They have said that they want, the CEO has said that he wants to hit production of 200 units per week run rate by the end of 2019. So that'd be a 10,000 per year unit run rate by the end of 2019. Now, in my base case, I don't have them hitting 10,000 units per year until 2022. Why? Because it's going to be way harder than they think. It's going to take way more time. It's probably going to take them way more money than they think. And so I just want to be conservative. That's what I'm assuming for the base case ramp. Slowly and steadily, only 1,000 units in 2019, tripling to 3,000 and then to 10,000 by 2022. If you look at the financials and how they correlate to that, you can see that in my base case, they're going to be losing money throughout 2021, and then I have them, but revenue is going to be growing quickly. But even so, as they ramp gross margins and sort of try and get the business model off the ground, I see them hitting break even in 2022 at about 132 million in revenue. They won't be generating profit, but they won't be losing money, and maybe they could keep growing from there. Look at the valuation there. I'm assuming they'll have 37 million shares outstanding by the end, and I have a Google Doc which has all the details of these financial models, which I'm going to put a link to in the description, so all of you can make sure to download it and play with it and put in your own assumptions as well. But I assumed a lot of dilution. So the company at the end of last quarter had about 16 million shares outstanding. They sold, another million, so now they have about 17 million shares outstanding. But I'm assuming that by the year 2022, they more than doubled their share count to 37 million. So that's assuming that they keep continually sort of selling a little bit of stock here and there to fund growth and expansion of capacity. That's normal. That's what you'd expect from this type of manufacturing business. So you've got to price dilution in. So 37 million shares in 2022, let's say it's the same, trading at the same price that it is today, $3 a share. That's 111 million market cap. 111 million divided by 132 million. We're looking at a 0.8 times price sales. And it's not applicable price EBIT because there's no earnings to do it. So it'd be 0.8 times 2022 sales in my base case, but not making a profit. So I don't know, that really doesn't pull me either way. And I think the one biggest insight I get from this model is if it takes them a long time to ramp to that 10,000 units per year, there's going to be significant dilution along the way to be able to get there. Now, before we get into the fun of the bull case, let's go to the bear case. So this is what I have, and this is a very pessimistic scenario, I think. Remember, they already have 3,250 orders on the books, and they said they can get to ramping production of 10,000 units per year run rate by the end of this year. And I only have them selling 10,000 units through 2022. So just 500 units in 2019 to 5,000 in 2022. This is the sort of revenue, gross profit, operating income there. And I did assume, a little bit bigger dilution in this scenario because it's going to take them longer. I assume a little bit worse on the gross margin ramp. And as you can see, they do hit revenue growth is solid here, up to 65 million in revenue, but they're still losing $13 million in 2022 just because they need to get bigger to hit that scale. It's a really, there's a lot of costs in this business model. And so I think there's a real chance that, this doesn't work. They can't do it profitably. They never hit the scale needed to be profitable. And the company just keeps losing money and eventually goes bankrupt. Like, I think there's a very real chance this fails. It's still so early. The valuation on the bear case, we're looking at 48 million shares, so much bigger dilution there, times $3 per share, 144 million market cap, and then divided by 65 million in revenue be 2.2 times price sales, divided by negative 13 million in earnings, so no real price EBIT ratio. So the bull case, I am assuming that they deliver 2,000 units in 2019 and 20,000 by 2022. And remember, this is way below the guidance that Arcimoto has set, but I'm just doing this to be conservative because it's a hard business. So if we take a look at the financials here, you can see the revenue growth is insane, really. I mean, they go to hitting 268 million in revenue by 2022, 83 million in gross profit, and that would carry them over, cross the inflection point to where I believe this business could be significantly profitable if once they start delivering, well over 10,000 units per year. And so at that 20,000 that year, 2022, when they deliver 20,000 units, I think Arcimoto could be making 30 million a year in earnings. And if we take a look at the valuation there, and they would have to dilute less too in this scenario because they're more profitable sooner, and 34 million shares times $3 per share, 102 million market cap, 102 million divided by 268 million in revenue, 0.4 times price sales, 102 million divided by 30 million in 2022 EBIT. We're just looking at a 3.4 times price EBIT ratios. Hey, Arcimoto, at $3 per share with 17 million shares outstanding is trading at just a 51 million market cap or so. And so if you think about it, Arcimoto, for a company that could be doing 30 million in earnings in 3 or 4 years, $50 million is an incredible deal. Like, there's huge upside. I think Arcimoto, if they're doing 30 million in earnings, this could be a 500, a 600, a 700, $800 million company company. And if it is, even taking account dilution, you could see a stock price that goes up 10x to 20 or 30 or 40 bucks a share, assuming they can get past that 20,000 units per year delivered. So that is sort of what gets me excited about Arcimoto, and that's why I became a shareholder today, because I love the CEO and founder. I think he's got what it takes. He's committed, he's hustled, he's putting the money where his mouth is. The company has been developing this product for 11 years, and now they're at the end of Q1, they're going to open their first big flagship store. They're going to start retailing to customer deliveries. They're going to start working through this massive $50 million backlog. And if you believe there's a disruption taking place in the transportation system, if you believe these things could be adapted to be autonomous, or they could work for parcel delivery, or they could work for ride sharing, there's so many different use cases for these sort of smaller, lightweight, smaller footprint, cheaper electric vehicles in the new transportation system. Like, imagine Lime, the scooter company, wants to build a sort of, a different mode of transport, and they buy 10,000 Arcimotos alone to just put in a city that you can rent and drive around and pick up, just like the Lime bikes. Like, I think there's so many different options and ways that I see demand going way beyond 20,000 units per year, that this gets me excited that I think in a super bull case scenario, we could be looking at $1 billion company plus way down the road, even if it's still a niche, even if they're selling only 50 or 100,000 units per year, which is still a niche product, still maybe only at resorts, golf carts, and a couple weirdos commuting. You don't have to get everyone using it for this to be a home run investment at this price. You just need them to be selling more than 20,000 units per year, or that's my estimate. So anyway, I'm taking a chance on Arcimoto. I'm going to be following the company. Being a shareholder just makes me more involved, even if it's like almost no money. It makes me a part of the story, and it makes me like committed to learning more about it. And then maybe if I'm following it and I see another good opportunity, I have some more money in the future, I can invest and I'll be better informed. It's like scaling into a position. And so I dip my toe in the water. I'm a shareholder. I want to go to the shareholder meeting. I want to visit the facility. I'll be covering Arcimoto here on the channel. So stay tuned. Let me know what you think in the comments below. Huge shout out to our Patreon supporters and producers helping out the channel. Definitely check out our Patreon page to see the Hyperchange newsletter. Anyway, I'll see you guys next time. Peace.